Welcome back to Market on Close. I'm Marley Caden here in Chicago alongside Sam Bottis at the New York Stock Exchange. A very busy day here on Market on Close, but we'll close out how we always do with some final thoughts on today's session. For me, it's just a broad look at the third quarter earnings season so far, off to a very strong start with many of the S&P 500 companies posting really impressive results. Prior to the close today, we'd heard from just over half of the S&P. In that group, 82% reported better than expected earnings, 68% beat on revenue. For the group, earnings are up overall more than 15%, although very interestingly, the average one-day price move after earnings for the group on the whole is in the negative. It's about a quarter of a percent down. So it doesn't mean more of them are moving to the downside, but their full moves on the average is in negative territory. And some of that could be attributed to this AI spending bonanza, big tech spending bonanza starting to raise some eyebrows on Wall Street. We've seen this increased AI CapEx spending nearly across the board, but strong reports are not enough to please the street right now. Despite Meta and Microsoft both posting very strong earnings yesterday, their stocks dropped. Investors are growing cautious, warning that without clear monetization, AI investment could mirror past tech excesses. With cumulative AI-related CapEx projected to exceed $320 billion, confidence in this AI trade is growing increasingly fragile, and talk about bubbles continues. This AI bubble conversation doesn't seem to be stopping anytime soon. Sam, almost every guest we have on brings it up in some way or another, often to say that they do or do not agree with it, but it is certainly a top of mind point for everyone we're speaking to.
Oh, absolutely. And particularly, as we continue to hear from these hyperscalers, I think it's really been interesting also to hear from some of these memory names as well. I mean, Western Digital, like we just broke a little bit earlier, it really seems like it's their moment in the spotlight at the moment because of that tightening supply and also those higher prices. Many are bullish on those names as well because of that massive capex in the AI data centers. But I'll park that there. What I've really noticed, Marley, is that the earnings continue to point to a K-shaped economy. So if you listen to the airlines that we've heard from, they're filling the front of the plane. The credit card companies are holding up thanks to the higher income earners as well and those spenders. Yet Chipotle, as we heard yesterday, is seeing a slowdown in their lower income customers. But it's not just the economy that's really brought to you by the letter K right now. As I've been talking to Lizanne Saunders about over at Charles Schwab, it's the stock market too. Now, breadth, as KG pointed out earlier, did look slightly better today. But earlier this week, as I mentioned, we had the worst day in history for breadth on a day when the major indices were actually up. So it's been a really interesting dynamic in the markets, and it's very unclear. I was talking to Lizanne about this earlier today. What would be the catalyst for some more broadening out of this market? And I suppose that really gives you a sense of that K-shape and that sort of two-track economy and stock market that we're seeing right now, Marley. But heading into tomorrow, who said it was a marathon, not a sprint at the start of this show? I feel like we're in one right now, but what will you be watching out for?
I'm going to be really focused on the reaction to the calls. We're seeing such a move to the upside from Amazon, up still more than 11% right now. Apple is in positive territory after doing some teeter-tottering there, now up about 4%. But it will be very interesting to hear the commentary, not so much from Amazon, as they had a very impressive report, but from Apple, because we kept hearing from everyone we're speaking to, and in all of these analyst notes, they want development of this AI strategy. They want them to stop standing in the corner. And as we just discussed with Matt Maley, they may not do that. And that's not their style. They don't generally come out and make these grand announcements. So it will be interesting to hear any more commentary also on China's sales and how they're going to look potentially for the next quarter as well. How about you, Sam?
Yeah, well, obviously, we've got a long list of names that are going to be reporting tomorrow as well. But the ones that I'm going to be looking out for are the oil majors. So they're next up. And we'll hear from ExxonMobil and also Chevron before the bell. So the market will be looking out for what they say about production and also costs, given the ongoing volatility that we've seen in crude prices. Now, oil producers have faced a bumpy year, to say the least, with all those trade tariff announcements and OPEC Plus countries also increasing output, which has led to those lower prices and then translated into lower earnings because of some of the supply glut concerns. But higher prices over Q3 compared to Q2 could actually help here. We'll see. I'll also be keeping an eye on something that I look very closely at, and that is Chinese official manufacturing PMI. And that is because while things have been improving, factory activity has still remained in contractionary territory in the world's second biggest economy, and that is for 6 months. And this is important at a time when Beijing has really been sort of cracking down on that overcapacity, but also, of course, as China continues to find other export markets other than here in the US. Marley.
Thanks so much, Sam. And thank you all for being with us today on Market on Close for our extended edition for Apple's earnings. That is going to do it for us.